Alright, let's talk about what everyone's been whispering. Is the housing market finally cooling off? Here's the crazy part. According to the latest 2025 data, national home sales have dropped nearly 11% year over year, and the median home price has stalled for the first time since 2012. Mortgage rates are sitting near 6%, inventory has ticked up a bit, and buyers are finally catching their breath. But don't be fooled, this isn't a housing market crash. It's more like a long, deep exhale after a sprint. Housing prices aren't collapsing, they're stabilizing, and in some regions, they're quietly heating back up. So today we're diving into what's really happening. Is the real estate market cooling down, or is this just the calm before another storm? And hey, before we dig in, if you love staying ahead of housing trends, make sure to subscribe, like, and drop a comment below. It really helps this channel grow and keeps these deep dives coming every week. Now you've probably seen headlines screaming that the housing market slowdown is finally here. But when you look beyond the clickbait, the truth is more complicated. In 2025, we're dealing with a tug-of-war between interest rates, inventory, and income growth. The Federal Reserve has held rates steady since late 2024, not hiking, but not cutting either. That means mortgages are stable but not cheap. At the same time, the US finally saw inventory rise above 1.5 million active listings, up from just over 1 million last year. That's the first real breathing room buyers have had since the pandemic rush. But even with more listings, demand hasn't disappeared. Millennials are still in their prime buying years, and investors haven't exactly cooled off. Here's what surprised me. While some major cities are flattening, others are quietly breaking records again. Take Miami, where median prices jumped another 5% this spring. Or Dallas, where new construction permits are up even though sales volume is down. So is that really a cool down, or just the market evolving into a two-speed system? Let's talk about what's causing this strange mix of stability and volatility. First, interest rates. Everyone thought the Fed's inflation fight would tank housing completely, but it didn't. In 2025, rates have hovered around 6 to 6.5%. Not cheap, but not devastating either. Buyers adjusted. The shock of 8% rates back in 2023 was the real slap in the face. Now people are used to it. When people adapt, the market steadies instead of crashes. Second, inventory. We've got more homes on the market than last year, roughly 1.5 million nationwide, but still well below the 2.5 to 3 million that marks a balanced market. Buyers finally have options, but sellers still have leverage. Nobody's panicking, nobody's desperate. Third, buyer psychology. Buyers have shifted from FOMO, fear of missing out, to FOBO, fear of buying overpriced. Remember 2020, 2022? People were waiving inspections and bidding 50 grand over asking. Now they walk away if a home feels overpriced. That mental shift cooled demand more than any interest rate hike ever could. And affordability, that's the tight squeeze. Incomes have risen, but not enough to catch up with prices. So even though sellers aren't slashing prices, buyers' budgets are maxed. The market's running out of oxygen. But here's what's wild. Despite all that, some markets are actually heating up again. Phoenix dropped almost 7% last year, but bounced back 4% this spring, thanks to job growth and migration. Charlotte's the same story. Inbound moves are keeping homebuilders busy, and resale homes sell in under 3 weeks. So the real estate market isn't cooling everywhere. It's splitting into cooling metros and resilient metros. And that's where things get interesting. Let's start in the south and southeast of the United States. Florida, Tampa, Orlando, Jacksonville, still strong but moderating. Prices are up 3 to 5% instead of 20. Sellers aren't getting 10 offers in a weekend, but homes still move. 25 to 40 days on market? That's normal. Demand hasn't vanished because migration keeps fueling it. Remote workers, retirees, and investors keep coming for the sunshine and no income tax. Florida's not collapsing, it's recalibrating. Texas next. Austin and Dallas are shifting gears. Austin fell nearly 10% in 2023, but is climbing back slowly. Dallas and Houston? Stable, prices flat, inventory balanced, investors tiptoeing back in. Builders never stopped, they just downsized floor plans and improved pricing. That's keeping the market healthy. Now hang on, Because the Midwest is quietly stealing the show. Cleveland, Columbus, and Kansas City, these affordable markets are leading in percentage growth for entry-level homes. Buyers priced out of the coasts are heading inland. In 2025, the average home in the Midwest is still under $300,000, nearly half the national median. That's attracting first-time buyers and investors chasing solid cash flow. If you want balance, job growth, affordability, and rent demand, the Midwest is the sweet spot of 2025. And of course, the West Coast. San Francisco, Seattle, Portland, slower sales, longer days on market, and real price drops. San Francisco's median is still over 1.2 million, but down 6% year over year. Tech layoffs and remote work shifted demand outward. Seattle's inventory is up 30%. Sellers are offering concessions again. This is not a collapse, but rather the result of gravity taking its course. Southern California, especially San Diego, is holding firm because of limited land and high incomes. Northern California needs time to reset. Taxes and affordability are pushing migration east. Quick pause. What's happening in your city? Are prices dipping, stabilizing, or rising again? Drop a comment below. I read them all. Now, over to the East Coast. New York City is still its world. Manhattan's median sits near 1.4 million. Sales volume's down 20%, but demand hasn't disappeared. Buyers are just waiting for deals. Brooklyn and Queens are balancing, fewer bidding wars, more realistic pricing. That's not weakness, that's sanity returning. Boston refuses to cool. Even with 6% rates, prices are up about 2.5% thanks to biotech, education, and healthcare jobs. And Washington, D.C.? One of the most stable markets in the country. Prices flat, inventory healthy, anchored by government employment. Now, speaking of investing, quick word from today's sponsor. This video is brought to you by New Silver, one of the fastest ways to fund your next real estate investment. If you're serious about flipping houses, buying rentals, or scaling your portfolio, you need a lender that moves fast, and that's New Silver. They offer fix and flip loans and rental loans with quick approvals, flexible terms, and tech-driven underwriting that helps you close faster than traditional banks. In this kind of market, speed is everything. Whether you're in Florida or the Midwest, having financing lined up gives you the edge. So if you're ready to invest smarter this year, check out New Silver. First link in the description. Supporting them supports this channel and keeps these market updates coming every week. Alright, back to it. If you're still watching, you're part of the smart crowd that actually wants to understand the market. And get this. While the mainstream market's catching its breath, the luxury sector is sprinting ahead. Homes above $2 million? Sales are up 8% year over year. Wealthy buyers don't care about rates, they're paying cash. Inflation's down, the stock market's up, and they're parking money in real assets. This creates a split reality. Everyday buyers are waiting for rates to fall. Cash investors are scooping properties now. Some cities cool, others heat right back up. Let's talk investor behavior. Big institutions slowed after 2022 but didn't leave. They're targeting markets with strong rents and low vacancies, Indianapolis, Tampa, and Raleigh. Meanwhile, small investors are creeping back in. They've been watching, waiting, and now see opportunity. Rental demand's strong, appreciation steady, and cash flow looks good. So what looks like a cooldown is really a shift, from emotion-driven to strategy-driven. If you've been waiting to grab a fixer or rental, this might be your window. And don't forget, New Silver can help with that. Their fix and flip loans are made for moments like this. Links in the description. People keep asking me, Rodney, are we finally in a buyer's market? Not yet, but we're closer than we've been in a decade. A buyer's market isn't about prices crashing, it's about leverage shifting. Sellers negotiating again, builders offering incentives, agents actually letting buyers think overnight. That's balance returning, not panic. Here's the first big turning point, the affordability ceiling. Prices outpaced incomes for years, and now we've hit the limit. That's why homes sit longer and growth's flat. It's not fear, it's math. Until wages rise or rates drop, we'll hover here, steady but cautious. Second turning point, inventory rebound. Remember when you couldn't find a house to save your life? Builders and owners are listing again. The pandemic shortage is easing, We're not in surplus, but the logjam's breaking. This is why 2025 is fascinating. It's not a boom or a bust, it's a rebalancing. And if you're still here watching, you get it. This market isn't dying, it's adapting. The buyers, sellers, and investors who learn the new rhythm will win. So think like a strategist, not a spectator. Watch the data, not the drama. Headlines are emotional, housing is mathematical. Where does that leave us? The real estate market in 2025 isn't collapsing, it's normalizing. After years of pandemic madness, we're finally seeing something sustainable. Fewer bidding wars, slower growth, realistic pricing. That's not doom, that's health. Smart investors love transition periods like this. This is where wealth is built, not in chaos, but in calm adjustment. Forecast for the rest of the year? Prices flat to up 2%. Rates hover around 6%, with the possibility of reaching high fives if inflation continues to ease. While it may not be glamorous, it remains a solid investment. The big theme, regional resilience. The Sun Belt's still strong, the Midwest is quietly winning, and the coasts are recalibrating. If you're wondering when to buy, focus less on timing the market and more on time in it. Because 5 years from now, you'll wish you'd started today. Even in a so-called cooling market, over 4 million homes will sell this year. People will still move for jobs, families, and new beginnings. The question isn't whether the market's hot or cold, it's whether you're ready when opportunity knocks. And before we wrap up, a quick reminder, if you're serious about investing or flipping, check out New Silver. They're a tech-driven lender for real estate investors with quick approvals, transparent terms, and nationwide reach. Links are in the description. Supporting them supports the channel. So, is the real estate market cooling down? Not really. It's recalibrating. Prices leveling, rates steady, buyers smarter. The next chapter rewards strategy, not speculation. If this video helped you see the market clearer, hit like, subscribe, and drop a comment with what's happening in your area. Share this with anyone still asking, should I wait to buy? Because waiting for perfect usually costs more than acting prepared. And if you're still hungry for insight, my next video is, where are the best real estate deals left in 2025? We'll dig into undervalued markets, hidden gems, and cities with real long-term potential. Make sure you're subscribed and notifications are on. You don't want to miss it. Thanks for watching. See you in the next one.